Hello and welcome back to another one of our podcasts. Today we're going to be talking about the end of tax season, how it's gone and all that kind of stuff, which Robyn today is actually going to lead. So my name's Jack Revis and I am joined today, as I just said, by Robyn Moore, Kym Ritchie and Andrew Revis. So I don't know if we just want to jump straight in, Robyn? What's all yours?
Yeah. So to start us off, I wanted to know what is your overall feelings towards the last tax season?
Overall feelings, eh? Do you want me to start? Shall I start? So I would say it was actually all right. It wasn't too bad. It went quite well. I don't know if I'm going to answer other questions you've got, but I thought overall it was a good one. It probably wasn't our best, as in like amount we had left in January kind of style. But I thought it was quite good. I don't know what you guys thought.
Well, I thought we weren't in such a strong position as we were this time last year, or January, because we came in still needing to do 40 returns. But in actual fact, it went quite smoothly. I didn't feel the pressure in January as I have done in past years. But it does happen that it's like both of us doing the returns now, whereas before it was just all based on me doing them.
Yes.
So, I did find it a lot less stressful.
Yeah, see, I felt it was my easiest one this year as well. I said that to you, didn't I?
Yeah.
You said it was controversial, but I don't know why it felt easier, but probably like the pressure and things like that, even though we still had a lot to do at the start of January.
Yeah. I think the fact that the workload gets shared around so much now.
Yeah. I'm sure everyone is contributing to tax returns in one way or another.
Mm.
So.
And with obviously more streamlined processes we've got.
Yeah, definitely.
Cool. One thing I noticed that quite a lot of my clients who were like jumping to get their tax returns done in previous years were bringing their stuff in a lot later. They didn't want to know about it, didn't want to do it. Did you find any of that, or did you have different experiences?
I think some of the reason for that was that some of them weren't going to get refunds this year because they'd had the claims and they were going to pay tax. So they weren't in such a rush to get that information to us.
I completely agree with that. I had a few that normally we do in April, but as you say, they normally get a refund. They claimed the SEISS this year or last year. They weren't as keen to get it done because they'd have to pay tax. So
Not as panicked. They probably thought as well that there's not going to be another claim, so they didn't need to get their tax returns in as badly as they would have previously.
Oh, that's true.
Yeah.
That's true. They were based on that last year. But then I guess, but also I had a few this year that don't normally get refunds, and they didn't get their stuff in as quick as they normally would. So.
It was all a bit different, wasn't it?
I guess everything was a bit different in this last year. We were in and out of lockdowns and stuff, so I guess people didn't really know where they were. Just in general. But
I think some of my bigger jobs came in early, which had an effect on the year-end ones that I had to do. But paperwork that came in sort of towards the end, like later on, not late as such, but November and December were probably more of my small to medium ones. So I was able to get them done. And I knew that last year I was really stressed out with them. So when they came in, I tried to turn them around a lot quicker and get the whole job done and have the queries. So just didn't want a repeat of last year.
Yeah.
But I did, one of my earliest ones that came in was actually my last one to complete, just because the issues going back. Yeah,
I had the
issues going back and
I
forward.
started one in May, and then it wasn't finished until like the last few days of January.
Yeah, it's funny.
So, it is weird how that comes around.
hello everybody, it's Jack from the future in editing. I just want to quickly say something. In this next bit that we're about to talk about, we talk about billions when we actually meant to talk about millions. So I just wanted to make sure to put that in here and just get it nice and clear. But so we're talking about millions and not billions. But anyway, back to it.
So 2.3 billion tax returns were late this year. So that's 19% of all self-assessment. Do you think that kind of reflected in our submissions, or was it completely different? Or
We didn't have that many that were late, did we?
No, so we had a couple that were late.
I had three.
Three that were late submissions.
On the first, second.
And then we did have a couple that we didn't actually end up doing. Maybe I don't know why, but I don't know if the clients did them themselves in the end or what happened there. But for us, we've never really had many late submissions except one year, but that was a major computer failure year, which I don't want to talk about. But so for us, internally and as a business, I don't think it reflects on us, like what we've experienced. But
that's a general trend, though, isn't it? Every year.
yeah,
Yeah.
I'd be interested to know what it was. Not last year, the previous year, because the last 2 years they've extended the deadline. So I don't know again if I'm nicking some of your questions, but so I don't know if that would have impacted. Say maybe normally it's only, was it 2.3 billion now? So maybe it's only normally 1.3 billion, but this year they've extended the deadlines again. So maybe.
I think we're talking million here, aren't we? Not billions.
Billion.
Billion.
I think so. You made me question myself now.
2.3 billion. Well, I don't know. It could be.
Fact check it later.
Fact check it. Check the comments. It'd be more. So, yeah, I don't think it's reflecting us, but it doesn't surprise me. But as you say, it's a normal trend, really, isn't it? A lot of people don't do it. And I'd like to go again. I'd like to know the stats on actually how many of them now hit the February deadline.
Yeah, it will be interesting to see how that turns out.
Oh, just clarify, the deadline wasn't actually moved. The deadline was still 31st. They just postponed the.
Yeah.
Clarify from what I was saying, but yeah, that's what I would say anyway on that.
So, and this year we introduced tax return checklists for all of our self-assessments. I was going to jump to you quickly if you can explain kind of what they are.
So, if I'm completely honest, it was kind of stolen from some stuff I've seen on some accountancy forums I'm on. People have said about it. I thought actually it's a good idea. And the idea of it basically is all of our clients fill in a checklist of saying what income they've received. So they're sort of saying, first question is, have you received PAYE income? Yes or no? No. Then it moves to self-assessment income, yes or no? So on and so on. And then rental incomes. All of these things that potentially some people would forget about putting or telling us, it's basically there just to help clients remember what they've got to give us and also help us make sure we put the correct stuff on people's tax returns. I think it's the...
Lovely. What was everyone's thoughts on those checklists? Did you get any feedback from clients or anything?
I liked them. Didn't necessarily get feedback from clients, but I did like them because they gave you a much better understanding of the income that client had been generating through the year. So it's quite often you'll find that they won't give you all the information. Whereas if they're filling that checklist in, provided they fill it in correctly, we know what we need from them.
Yeah.
They kind of say, oh, should I put this or not? So it prompts them to ask us as well. But most of my clients were really good about doing it. There was a few that kind of thought, why are you asking this after all this time and not liking the change, which I'm like as well. But
Right,
I'll start that bit again, shall I?
No, carry on.
Yeah, so most of my clients were really good about getting it in, but some of them didn't like the change, like I say. So I think it helps with including certain things that, like you say, they might not have missed out or they could have asked us. But originally I was like, oh, not another thing to do, but actually I really like it.
Yeah, one thing clients I think always used to miss, like child benefit charge, because when you're a higher rate taxpayer, you've got to pay it back. But for a lot of our clients, that probably doesn't actually matter, but it's a good thing on there to remind people to actually need to tell us that. We did have a few bits of feedback on it, so there is some changes we're going to make to it this year, just make it simpler and a bit more clearer, because there were some questions some people didn't quite get, and maybe take off some of the branchings about what I mean. So when you answer a question, it then brings up another question.
Yeah.
But I think some people were getting confused because they haven't seen the question they're expecting to answer. For example, PAYE incomes first, so some of our self-assessment are ticking yes on that because they're not seeing the self-assessment. So maybe like we have both of them up first kind of stuff, just to make it clear. But only little things, but I think it was very successful and I'm very pleased we did it.
Yeah.
We're keeping it in place, I think anyway.
Yeah.
Also, it's a good backup for us as well because if there's clients signing a declaration, they're giving us all the information.
Yes. Correct. Which is good for us. It helps us. But
there was one
that sold a house, but I didn't know that till they gave me the tax return checklist. So quite major thing.
It's not only just useful for us, but it's got to be useful for the client as well because they're not missing stuff out.
Yeah.
You know, I mean, they might be missing stuff out, not intentionally.
Yeah, not realising.
But with the checklist, it prompts them to give us all the information that we need.
Did it affect many tax returns? Did it change, like long-term clients that we've had previously, did many things change or?
I'd say it raised some questions.
Yeah.
One for me was with rental income, was people putting in their percentages of what they owned on that rental income. There were some weird ones that come through on that. Whereas, for example, the last few years, I don't know, say we've put it for as 50%, and then they put actually they own 100% of it. Turns out they didn't; they just did it wrong or something like that. So I think, and then there was a few others. I can't remember exactly off the top of my head, but there was a few that were like, "Oh, hang on, we didn't know about this."
I think the child benefit one is very useful because I think in the past that has been missed.
Yes.
As we've seen now with HMRC, they're looking into it going back a few years because some people just haven't declared it, and they're going to end up paying a lot of money back. Before, I mean, we've got one of our clients has now stopped the claim. It's 2 consecutive years now they've had to repay it.
Yeah.
So they've stopped their claim. But I think a lot of people are going to be caught out on that.
Yeah, it's a big chunk to pay because of the year, isn't it?
So I've obviously never claimed it, but I don't know if it's clear at the start when you claim these things if that you have to pay it back or not. I don't know, but because I've obviously never claimed it.
I don't think it was really advertised as much as it should have been.
It was years and years ago, and then I think it was mentioned then, and it's never been mentioned again.
So
I don't think everybody's aware of it.
Yeah.
And of course, the other thing is it goes on the highest earner.
Yes.
Now, not every married couple will know what their partner earns.
No.
They don't always tell them. So you don't know how you're going to make that declaration.
no, that's true. That's true.
Yeah.
Very true.
Think about that. Good point.
This is quite a broad question, but I wanted to ask, how do you think COVID kind of impact on tax returns this year? Because obviously we had, the May 2020 was quite bad and everything, so how was it impact?
Well, I'd say, I mean, a lot of accountants were saying they were struggling to get through everything with the COVID. Well, I don't know what you think, but I think the last 2 years, we haven't really had those problems, have we? It's not been as difficult.
No, we've got better.
We've been further ahead of the game than we have been in previous years.
Yeah, definitely. And I think part of that is because during COVID and during lockdown, clients were forced to send us stuff digitally. So a lot of them have carried that on and now emailing stuff through, so we're not waiting for them to drop off paperwork or any of that kind of stuff. So I think that actually is one thing I'd say is done it. But also during COVID, we were forced to refine a lot of processes.
Yeah, that's true.
Because everyone got shipped out all of a sudden with their bloody desktop PCs, that we had to figure out how to move stuff forward. So,
And I don't know, maybe we were set up to work from home a lot easier than other places. They might have had to close. Because I know a local one near me, they wouldn't have been able to just get everyone home within a day and work from home. So that could have had a big impact.
yeah,
I
definitely.
think it was quite effective, actually, even though we're working from 5 different houses.
Yeah.
But it worked with things like Teams, Zoom
Yeah.
meetings.
Yeah.
I never imagined doing something like that before,
No.
but now it's just second nature.
Yeah, exactly.
The new norm.
And we've kept it, and a lot of our clients are preferring like the digital meetings or virtual meetings and all that kind of stuff. We've converted this meeting room into do it, so we've got conferencing abilities now and all that kind of stuff. So, which I think, a lot of clients think it's better. But COVID effect on tax returns itself, the only biggest one is people paying more tax
Yeah.
with the grants, and there's still some people that didn't realise they were taxable and now don't have the money to pay the tax.
Well, yeah, because you had 2 different things there, didn't you? Those that did know, and they were bringing it in late, delaying it, when previously they would have got it in earlier. And then those that had a shock, were saying, I didn't know that was taxable.
Yeah.
Even though it was mentioned a lot in the podcasts and such like that, webinars that we were doing on a regular basis, but some of them it still came as a bit of a shock to them.
Yeah.
They're thinking, actually, I earned less money this year, but I'm paying more tax. But that's because the difference from what you're earning there has been topped up.
Yeah.
And there's no cost to offset against it.
No.
The expenses have gone down.
Yeah, not at all.
Yeah, I think some people forgot to let us know about the grants and the self-employed. Not intentionally as such, but maybe not thinking it was anything to do with the tax return. It was more like sort of a benefit or something.
Yeah.
But I found that the people that did get it did mean that their earnings were more, so their taxable income, because I suppose everyone panicked at the beginning, and maybe they thought their work was going to dry up, and it didn't dry up as much as it did. Some people did better, and obviously that's reflected in the tax return at the end because their turnover's higher and on top of the grant.
Also, with that, I think there was a bit of a confusion with some of that as well on the checklist. We were saying, did you receive your grant?
Yes.
And people like directors were ticking yes, but they didn't actually, as individuals. They received it through their company.
Yeah, but they see the income into the company as their own. So again, that was feedback we did get, which is something we'd change next year. Would be, did you receive SEISS, or did you receive this? So we'd actually specify each grant kind of thing. But yeah.
Yeah, because I think I had a call about universal credit. Someone said, "Oh, do I put that on it?" and things like that.
Yeah. So just add in descriptions to each question. Back to earlier.
Yeah.
You've stolen my question. I was going to ask about how it affects tax due.
Oh, what, the other grants?
Yeah.
Oh, it makes it higher.
Yeah. Funny
some
that.
people it didn't because they did have no income.
Yeah.
And they needed that grant. And then other people, because with the SISS, you could still claim it even if you were working. So some of them, it just kept them to where they normally were. So they paid tax at their normal levels. And other people who claimed it, they had a lot more tax to pay.
And also, there were some of the clients that were a bit more canny, and they realised it was taxable. Might have claimed the first two, but then realised it wasn't affecting their business.
Yeah.
They weren't losing business, so they stopped it, knowing that they were going to have this big tax bill.
Yeah.
I just had a little thought there. Why didn't the Inland Revenue take that off?
Take
It's
it
not
as
the same
source.
for everyone.
Yeah.
It should be different for everyone. At what source? Yeah.
So what?
It's very old-fashioned, isn't it, revenue?
Yeah.
Sorry, show my age.
Indeed.
What are your thoughts on the late penalty extension? Because obviously that's been extended to the 28th of February.
Yes.
Coming up soon.
So we haven't experienced it as much, but I think a lot of clients have, well, not clients, but people have taken that as well, fine, I'll just think about it later. So part of that, though, they would have been charged, or they will be charged interest on any tax due. Because I think HMRC's idea of it was to help accountants out, because there was a lot of accountants calling for it because they were snowed under kind of style. But I think in the long run, it possibly wouldn't have helped them out.
Yeah.
Because I think some clients then went there.
We've got another month. You don't need it yet, type of thing.
Yeah, that's what I think.
I just kind of ignored it and just checked
Well, yeah,
my
so
clients the same.
I don't know if this is normal.
We still worked to the same deadline.
We did.
Yeah.
And so we didn't advertise to our clients as such that it had been moved,
Yeah.
because I wanted to avoid the possibility of them going, I've got another month. So I don't know if that's naughty or not, but everyone got it in on the.
No, I only
Right,
had
that's
three that I had to submit afterwards.
Yeah.
But they were overseas clients, so there was obviously reasons for the delays there.
So that's all fine, but that's what I thought.
And I just wanted to briefly touch on MTD for income tax, because obviously that will be affecting our future tax seasons soon from the 6th of April 24.
Yes.
So what are your thoughts and opinions on that one?
MTD for
It scares me.
MTD for ITSA. I've done a lot of research on this because it was meant to have been 22, 23, now it's 24. I think the whole generalness of it isn't a bad idea, but a lot of, as we've just spoken, a lot of clients leave it to the last minute anyway with tax returns, and that's going to involve a minimum of 5 returns a year. So it means quarterly returns for everybody, a bit like that. And at the moment, every single tax return person at the same time. So we've got 120-ish self-assessments that we do.
Near 200.
Or near 200. Oh, fine, near 200. So potentially each quarter we need to do 200 quarterly returns.
Yeah, so instead of doing 200, we're looking at 1,000.
Yeah. Plus the normal one at the end of the year. So for us, it's going to be a lot of work. But then also, because of that, it's going to be a big cost to individuals and clients, like software costs, accountancy costs, as I just said, we're going from 1 return to 5. But I think overall it works, but my only concern is HMRC are the ones that are rolling it out. And I'll happily say that.
It doesn't bode well, does it?
It doesn't bode well.
Not on their past experience.
I'll give them one thing. MTD for VAT did go quite well, but they were already doing quarterly returns. They didn't really have much they had to do.
Yeah.
That's my biggest concern. And then clients wanting to do it and actually pay for it, kind of thing.
Yeah. Because I suppose a lot of the clients don't know that it's definitely a thing, and it's kind of like, oh, we're just sort of saying it.
The threshold for joining it is so low.
It's £10,000. We had this conversation the other day. We've got a client whose income is £11,000, so they'd be caught by it, and their profit was a couple of grand.
Yeah.
If you then start adding on what the extra costs they're going to do, they're probably not going to then have any profit because they're going to have to pay us to do all this extra stuff and all this software. So it's like, well,
is it worth it?
No, it's not worth it. So they may as well just give up at that point. So I would see that. I think we'll see a lot of that as a lot of clients just go PAYE, yeah. And then I also think we'll potentially see a lot more underhand cash stuff. I would say for those kind of clients. Because I think, well, I won't declare that stuff. There'll be a lot more cash jobs because they're not going to get anything from it.
Try to get under that threshold.
Yeah, exactly.
Yeah.
Luckily, directors, and so it has to be your main income of 10 grand. So directors won't be caught by it yet. The key word in that. And I do expect at some point HMRC will want quarterly payments. I think that's the end goal. They keep saying they won't, but it's got to be.
Yeah.
Why else would they do it?
From the outset, they said that wasn't the aim, and at a lot of conferences I went to, they were saying it. You had representatives from HMRC denying it, saying it wasn't going to happen. But now it looks pretty much like that's what's going to happen.
Why else would they do it? That's my thought.
It's scary, but
the other thing is they haven't actually considered. Well, they have considered the impact on accountants, but the timescales that they've worked out that it's going to take for us to do this is ridiculous. There's no way that you can do it in the times that they were saying. It was just minutes left for each return. It just wasn't. That's what
they quantified.
Really?
Yeah. A couple minutes per.
So they're saying it wouldn't have a major impact on us, but it will.
Yeah. It's going to be huge, I think. It's going to be a much bigger workload. It is good for clients and I suppose us knowing where things are currently.
Yeah, real-time information.
Yeah, that is great. But then there's a lot of clients who just get all their paperwork in one batch at the end. They're going to have a big shock of having to keep everything up to date and organised. And
yeah, definitely.
When forever they've not had to do that. It is a big change.
I think where they're going with the timescales is maybe, it's only going to take a few minutes to submit the return, but it's the keeping it up to date and getting all that paperwork in and inputting quarterly, which isn't really done.
No,
this
it's not done for people. It's going to be a big shock.
Yeah, massive change.
Well, those are all my questions.
Okay, lovely. Anyone got anything they want to add? Or? No? Okay. Excellent, let's finish off then. So thank you very much for watching this podcast. So these are coming back again, hopefully one a month is what we're discussing, and some other videos on the channel. So make sure you do subscribe, like the video, comment, share with people, all that fun stuff. But otherwise, until then, we will see you in the next one.